Okay, I bought the Homebuilders supplies, which is kind of a risky buy. So I just letting you know what I did. Not saying anybody else should have done this, but I thought I'd share with you what I'm gonna target to buy. And if you want to target that, that's up to you. Um, Remember, we are in a recession period. There's going to be interest rates. I just think there's a chance to make some money today. I thought there'd be a chance to make money due to options expiring, and we're probably going to get good earnings reports for the next week or so. So I think the market will go back up on that, and then the Fed will come and remind us that he wants the market to go down, and you'll see the market probably go down again. But there is a chance, I think, to recoup some money, especially if you're like me, want to get some of my money back. But I had bought nail this morning, and unfortunately, I had a buy at 19. And if you look at the summary here, it got down to 1906 this morning, and then my trade didn't execute. And right now I'm kind of busy doing stuff. So if I was in a better position, I would have just bought when the Dow was down this morning. So you can see how far down we were right off the get-go this morning. And then also, if the Dow is down, that's when I like to try and buy things I'm watching. So here we see the Dow is down to 30,200. Now it's sitting up around 30,008. We've had a 540 point jump. I'm already thinking sell at that point. I already was thinking sell at 300. Unfortunately, I've been trying to get nail at under 20, and I I thought the market was going to go down more. I saw it did get under 20, and I thought, well, I can get it for 19. Uh, but I didn't. I missed, and then I wound up getting it way up at 1980, um, somewhere around. That stupid chart's in the way. Let's see if I can move this over. I got it over around 1980, so it was sometime early this morning. Probably ran around here actually. Anyway, somewhere around here at 1980 something, and then it shot up, and it shot up pretty quick. I was going to take maybe a sell at 21, and then it kind of tanked. And then as it was coming down, I decided the market's too volatile. I'm going to try and buy this back at 19. So I sold it off just as soon as it got under 20. I just decided, hey, you know what? I'm gonna. Well, I guess I didn't actually have any losses. I try and sell a little bit more above so I still have positive gains. But once it got under 20, I was trying to get it back under 19, and then it got down to 1940 here, but then it took right back off this morning, and maybe that was risky because I think maybe a whole next week, maybe we see the market go up, and I really was intending on buying it at 20 and selling at 24 last week, and then I saw it was down pretty low, and I thought I would get it for 19 and made a mistake. So again, if you go to the summary here, 1906 was today's low, and the 1898 was the 52-week low. I thought I would hit a new 52-week low and see if we can bounce back up. You see, this stock was up to, or ETF was up to 127 at some point. I had sold a lot of shares way up at 100 something, and I'm trying to buy them back for cheap. And maybe I was getting too cheap, and maybe should have bought and held. But anyways, I didn't really have time to watch it this morning, and I saw the market go from 300 down to 200 something, and was a little concerned it might just start tanking, but the market did turn back around. You can see the Dow Jones shot right back up, and is doing pretty well right now. For me, again, 600 points in a single day, that is a lot for the Dow. A 2% jump is a pretty good jump. You'll notice that a 2% jump in the Dow, I'm going to be getting more of a 6% jump here. I actually was hoping for more of a 10 to 15% jump in a single shot, and didn't really hit those numbers. My concern with the home builders is the way the real estate market is going right now, and the economy. Not a lot of people want to maybe remodel their house and stuff right now. So this would be a more risky buy. My more favorite buys is semiconductors, as some of you know. I didn't buy the semiconductor because I can't buy everything, but I did have a target to buy under 6. So if you look at the summary here, today it got down to 755, but there was a time it got down to 621. I was trying to get it at 6 and probably should have just bought, but I'm riding it out right now. So my choice this morning was to buy more of the semiconductor. I'm already in above like at 12. So I want to buy more at 6 to get like half what I was paid in at the first time. But now it's sitting at 830. That's almost a 50% jump it's getting to, 40% jump. So I don't know. If you go to the back to the chart here, and we look at today's low was, well, let's go. If you could have got it at the low at 755. So if you would have purchased it at 755 and it's currently at 828, that would be a 10% jump right there. And 10% jump in a single day, that's nothing to frown on. So especially considering that happened all in an hour or two. So if you would have got in this morning around 9:30 Eastern time or 5:30 our time, and even if you had sold here just a couple hours later, you got a pretty decent run. That's a pretty quick run considering where we're at with the market. I do think these are good long-term buys though. If you wanted to buy, it is a little more risky because these are ETFs that triple. So it's great when it's going up, but it's horrible when it's going down because you're tripling it down. But when you see the market flexing so much, there's kind of good opportunities. Again, 10% rate of return in a single year would be a great, not great, but a pretty decent year, especially in an economy and a market like we're having now. So the semiconductors, you can follow that. This is the actual semiconductor sector. And you see that it's at 250. So if you were in just regular investments, you'd be up about 250, 22.5%, whereas I'm up 8% in the SOXL. So it is more risky to get in and out of these things. That is why also I'm a little more gun shy of staying in. If I make money fast, a lot of money fast, I tend to want to take that out. I want to lock in some profits. So a lot of you know that's one of my favorite investments as well as this tech fund. And again, you can see our chart this morning. If you take a look at our summary, if you would have got in, let's just say you just bought early this morning and it was at 18, say it's at 1810. And then your current price right now is running at 23.40. What? Is that really? Sorry, 21.74 was its low. So let's just say you got in at 22. You're still up 6% in just a few hours. So going back to the chart, again, if you would have just bought as soon as the market opened, you know, you're getting it pretty low. You'd be getting it a good chance under 22. So if you did get it at 22, you're up 6%. And again, I think we could have a good week this week where you might be up 20, 30% by the end of next week. If we do get somewhat of a rally, a lot of times we get a little bounce back, and then reality might come back and hit us again. But this is your chance to maybe make a little bit of cash back. So I'm just sharing with you what I got targeted to buy. I had tech fund targeted at 20 is what my range I was looking for, and it did get under 18. So I didn't buy earlier, which may have been a mistake. I had my chance, but I was waiting for this week on Friday. I was kind of taken off that it was up a little more than I thought it was going to be, and that was one of the reasons why I went with the Homebuilders one, the nail. I had bought nail at 19 and I sold it at 24 a little while ago, and then I tried to get it back for 19 again. So again, I had it at 19, was at 24. So I took my 26% jump and then looked to get it back again at 19 for the Homebuilders one. NAIL was that ticker symbol. So this is another one I'm watching. I'm thinking 20 would be a great buy for long term. But sometimes my long term turns out to go quick sells if the market goes crazy. One of my more favorite buys right now for long term would be biotech. I think biotech is going to have a good run next year. Really buying in right now. You might look at this next year and go, why didn't I buy more at 7? I had a target to buy at 6, and it got down to 4. That was a while ago though. But if I go back to my chart, so down here, I could have bought it at 6, but I didn't get in. So I was out fishing that whole week and wasn't watching. But even at 6.59, I don't think that's a horrible price. I'm just not buying because it's already up 7.5%. So I'm just gonna kind of sit back and ride it out. I've already bought the Homebuilders today, and I'm just too busy to stay going. I just wanted to do a quicker video. So next time I do a buy, I'll let you know what I'm buying, or I'll tell you what I'm going to set my price at, and then you can watch, see what's going on. So this is the biotech sector. Again, you see it's up 2%, and that biotech was up like 6 or 8%, whatever it was. Again, usually this is your sector, so whatever this is doing, usually it triples or comes close to it. Another one that you might buy, which I think would be a more conservative buy, if you don't want to get quite as aggressive, I believe mid-cap funds is a good place. If you look at mid-cap funds, they don't tend to have as big of jumps up and down, but this mid-cap has good percentage ups. You can see this is the mid-cap sector. It's at 1.5% up. I had a target I wanted to buy at 30. And you can see this morning I had my chance. I can't buy them all though, so I bought Homebuilders hoping for a better pop. This is 4% right now, so you're better than double. See, sometimes it says triple, but it all depends on its holdings and what it's got. So you go to its holdings, and then you can check the quotes here. Basically, it's just following these sectors, and has money market funds too, where it's probably trading as well. So it's following the iShares. It's at 1.82%, and so this mid-cap fund here, we're up at 4%. So not quite triple. Oh, this mid-cap is supposed to be triple, but not quite triple. But usually you're up more than 2% or 2 times. The other one I like, but would be more risky investment, I think, right now. Although every time it seems like it's a more risky investment, it's the one that seems to do better. I do like the small cap sectors. They tend to have bigger movements, ups and downs. And the reason why small cap might be risky is in a recession, it seems like the big cap companies, your Home Depots, your Amazons, they're the ones that fare well, and it's the small cap companies that get hit. So a lot of pros will probably tell you that small cap is a lot riskier when you are in a volatile market or a recession. So anyways, I did have this one here, the small cap, as a buy at 30. I would love to get in at 30. It was down to 30 today. Again, I just you can't buy everything, so I had to make a choice, and I just really like that Homebuilders and wanted to get in at a low price. I think 19 even would be a good long-term thing. You could put $100 or 100 shares is like $2,000, and maybe it goes all the way back to 127. This summary here shows you that the semiconductors was up to 114. If you could get in at 30, you're looking at buying at a 52-week low. So those are the ones I've been marking. That's what I'm tracking, and you guys can track it for yourself and see what happens. All right, so I'm sharing with you what I'm tracking right now.